Hey guys, welcome in this new video. I hope that all of you are doing great. So in this video, we will talk about how to trade the stock market. So not a specific stock in itself, but the overall market. And I will share with you guys a couple of important points that you need to consider when it comes to trading this type of financial product, and also some lessons that I've learned from my own trading and my own experience as well. So just before that we get into this, as always guys, please leave a like under the video if you like the videos where we go more directly on the markets. I would really appreciate it, and of course it would help the channel grow more and blah blah blah, all these things. And also, well, don't forget to subscribe to the channel if it's not already done. A lot of people who watch my videos are not subscribed, so make sure you subscribe. All right, so let's get right into it. So we will talk about the general stock market. I will also kind of share with you guys where I stand right now with the current economic situation and the markets and what I think of them and things like that. All right. So the first thing that is important to understand whenever that we look at the stock market, so you guys can see here, I have the very long-term chart. We are back in 1915 here, right? So that is the Dow Jones, and that is basically the whole history that we have right there on this chart. Well, the first thing that is important to understand is that over the long term, this goes up. All right, and it's pretty normal, right? This is pretty much a reflection of the economy. Now, not perfectly, because sometimes there seems to be a disconnect between the economy and the actual stock market, so don't take this for words. But overall, right, it tends to show how the economy is doing, right? And so over the long term, well, if businesses are growing and there are more people on the planet and more people are, making money and spending money, it just makes the economy grow more and more and more, and that is why it tends to go up, right? So what you're looking at is basically the picture of the system in itself, right? So as long as we are in this capitalist system, well, this will keep going up, right? Unless there is a huge crash or whatever. But even if there is a crash, just like we saw, for example, in 1929, or even more recent crashes, for example, 2008 or even 2020 right now, well, even if we get these, market down, well, overall, on the very long term, this will keep to go up. And so that is really important to understand, because it means that the overall trend is to the upside. So of course, the best thing to do in this kind of market is simply to buy, right? You don't need to go super fancy or crazy about it. If you look at a chart like this that just keeps going up and up and up, well, if it goes up, the best thing to do is to buy. Now, it doesn't mean that you cannot sell, because of course you can decide to short the market because you think that it will go down. And if you are right about this, you could also make money, but that is more for short, medium term type of trading, because on the long term, just like we can see, the market is going up. So that's one thing that is, of course, really important to consider. Now, if we look at the more recent price action. So right now we are in 2020 as I'm recording this video, and you guys probably noticed, right? We got a pretty big market crash at the beginning of the year because of the coronavirus pandemic. This is what kind of led the market to go down. And since then, we have recovered, well, quite a lot actually. So we can see this on the Dow Jones, we can see this on the S&P or even the Nasdaq, but all the equities are up. Even the Nasdaq is near all-time high, which is pretty crazy, because the overall economic situation right now is still not, done, right? Like right now, there is still a lot of unemployment, right? There are tens of millions of people who have lost their jobs in the recent months. So it's not like the economy right now was doing amazing and everything was fine and there was a lot of growth, right? It's really not that at all. And that's why at the beginning, I kind of mentioned that there is sometimes a disconnect in terms of the market and the actual economy. So does it make sense right now to see these markets going back near all-time high? No, not really, right? That doesn't make sense. Now, we need to understand why these markets are pushing up in the first place. And one of the main reasons, and the actual main reason I would say, is the Fed, right? The Federal Reserve in the United States. That is, well, not this, central bank only, but other central banks across the world as well. They are just printing money and it just keeps going, right? They just print money, more money, more money, more money, and they push this into the market. This is what we call quantitative easing, right? So they print money, and with this money, they buy financial assets. And so the problem with doing this is that, yes, it makes the market go up, it makes everything not look so bad, but it's kind of an illusion, right? Because this up move that we are seeing right now is not a real reflection of the economy, right? If there is, the Fed that is just printing money and using this money to buy the market, right? Is this really showing us what's going on in the economy? Well, no, not really, right? And so that is a pretty big problem actually. And I think a lot of people are underestimating this problem, because once everyone realizes that even if these markets are going up, the economy is still pretty bad, this might, suggest that the market could go back down, and eventually, sooner or later, we might see a bigger down move coming. It's not impossible. People tend to forget the past, and that is one of the main things that you can learn from this video, and one of the most important thing that I want you guys to remember from it. People tend to forget the past, but what I want you guys to do is not to forget the past. So if we look in the past, 1929, which was the biggest financial crash, and we measure how deep this was, that's a 90% crash, right? 90%. I don't know if you realize this, but it's a lot, right? Now, are we going to see a 90% crash in today's world? Well, the probabilities are already less, because just like I said, we have the Fed and we have a lot more kind of institutions that are working around to make sure that we don't end up with something like this and a market that goes nowhere for 20, 30 years, right? Like if you would have bought, let's say in 1920 around this level, well, in 1940, you would still be at break even, right? So the market in itself, right? Like we can look at just the crash, and that is a pretty impressive, picture already. But if we look at the overall market around the crash, so before and after, well, it basically, did not move for 30, 40 years, right? And so that's pretty important to consider as well. Someone who invests their money in 1920, well, in 1940, they still haven't made money. And as years go by, we have what we call inflation, which means that the money loses value. And so someone who invested their money and who hasn't made a return on their investment in 30 years, it means that they are actually losing money, because the money that they put on the market is worth less today. And so that is really not good, right? And so it's only after this kind of period that we really saw, well, the beginning of, a huge uptrend until, well, very recently. So that is something really important to keep in mind, right? Don't forget history, guys. And so the reason why I'm bringing this up right now is because if we look at the time horizon of the crash that we are seeing today on the market, right? So if we look at it on the monthly candlestick chart, we have these 2 months that were down, and then we came back up, well, in the last 3 months, basically, right? So 2-3 months right now that we have been going up in this kind of correction after this down move. Now, if we go back in 1929, right, and we look at how long did it take for the market to crash after the first move that was initiated, right? So this was the beginning of the crash, and look at how many months it spent before going down, right? So these were, well, the 3 first months that the market were down, but look after that how many months we spent there, right? 1, 2, 3, 4, 5, and kind of after the 6 month, 7 month maybe, this is where we really started to see more momentum to the downside, and this is where really the crash actually happened. But you see that we spent basically half a year around these levels before that we saw a continuation. And so if we go back right now with the markets, we are only 2-3 months in this kind of correction. And so my point is that if the market is to go back down more, which is not impossible, and that is something that we need to keep in mind, well, it might want to spend a little more time. So if we look at 1929 on the daily chart, I don't know if we can go back this far on the daily chart, let's see. But I think it will be interesting to see how basically the structure is. And the reason why I'm making a lot of comparison with 1929 is because the current market crash that we are seeing, the only situation that is a little bit similar, and I'm saying a little bit because there are a lot of differences, but a little bit similar is, well, the crash of 1929. And so that's why it's interesting maybe to look at how it moved, what happened during that time, and what can we learn from this. So there we go, right? This is what we have. So look at how the market is behaving. And what we could do even to make it more interesting, we can use this tool here in TradingView, bars pattern, and this will basically copy the price action, right? So we can, well, I'll not take the whole crash because this went more down, just like I showed you guys. We can just take this piece and we can bring it to the current situation. So it will take a little time, so just bear with me guys. I'm trying to do this fast. I don't want to make this video too long, so let's take this like that. I could probably go on the higher time frame and bring it faster, whatever. It's not that long, right? So let's do this, and we will see how basically the 1929 crash look versus what we are getting right now. So there we go, right? So this is what we have. Now look at the similarities, right? Of course it's not perfect, and I can make this a little smaller, right? So maybe like this. So of course it's not perfect, it's just to give us an idea, but look at what we have, right? We have the first leg here, and then we got a very long correction that the market just kept going up and up and up and up and up, and eventually we saw the crash. What was the confirmation of the crash, right? Let's make this another color. It will be easier for the eyes to see. Maybe not that gray, right? Let's make it like that. So what was the confirmation of the crash? If we just look at this piece right here. So we got this first leg, we got this correction. How did we know that we were going back down? Well, it was actually right here. We got the down move, we got a correction, and this was the beginning of the downside. We got another one here, down, another one, down, etc., etc. It just repeated this structure many times. But what we needed to confirm the downside was kind of to leave this uptrend here, right? And so right now, my point, and the reason why I'm showing you guys this, is because I think that the only way that we will be able to confirm if this market is to go back down eventually within this kind of zone here is if we actually get something like this. So my view, my own personal view right now on the market is upside until that we get the breakout, right? So if we start to go down, if we get a confirmation for the downside, so let's say something like this, a correction here and then more downside. If we get something like this on the market, I would not be surprised if we are to get more downside within this kind of move here. Now, until we get this, my view remains to the upside. So we could do this and this and this and this and this and this. Could we even retest the all-time high and even break through? It's not impossible, right? It doesn't make a lot of sense to think like that because of the current economic situation with very high unemployment, a lot of businesses that will go bankrupt. We still have the coronavirus pandemic, there's still lockdown. We don't know if there will be a second wave. We have US-China trade war, we have Brexit. There are so many different, uncertainties on the market. There are so many things that could put pressure on this market versus the only reason why this is going up is the Fed, right? So it kind of is hard to think about the possibilities of this just keeping going up, but we need to face the reality. It's not impossible, right? These markets at the current moment are not rational, right? Just like I said at the beginning, they don't reflect the reality of the economy, okay? They are being pushed by the Fed. And so the reason why this is important and the reason why I'm talking about how to trade the stock market and the strategy is because one of the most important things that you need to understand in these markets is that your opinion doesn't mean anything, right? What you think should happen or could happen, it's 100% irrelevant, all right? So for example, if I look at my own perspective, just like I showed you guys, do I think that, if we try to look at it logically, right? Do I think that there is a higher probability for this to go up or to go down? Well, of course, it's to the downside. Now, am I going to sell this market right now? No, I'm not going to do this because I need to wait for this confirmation. So you see, even if I have an opinion on the market, I'm not going to trade my opinion until the market proves to me that this is actually what is happening, right? So as long as we stay up and as long as this keeps going up in this kind of move right here that we're getting, I'm not interested in selling this because the market can stay, not logical for longer than you can stay under control, right? A lot of people will, and I've seen this multiple times already, on social media. A lot of people are trying to sell it here. They're trying to come by, as if they were a genius where they know when the market will go down and when it will crash. And after that, they can post their screenshot on social media and act as if they were such an amazing trader. But what they will not show you is the 20 losses that they took before that trying to short the market. right? That's the reality. And so if you guys follow me on Instagram, you probably saw in the last couple of months where I was even talking about shorting the stock market. But did I do it? No, I never went short, right? A lot of people were curious to know, what did I do with this idea? Because I was talking about this, and why I wanted to sell this and why I think it will keep going down and things like that. But did I do it? No. Why? Because I never got the confirmation, right? I never got the confirmation of my opinion. So why would I trade my opinion? My opinion is completely irrelevant. What you think or what I think or what anyone thinks, 100% relevant. The only thing that matters is what you're seeing in front of you, which is the chart, right? So as long as it's showing sign of strength, right? And as long as this keeps going up, well, to me, it's going up, right? And you don't need to sell this. Just like we said at the very beginning of the video, overall, on the very, very, very long term, this has been going up and this will keep going up. So the only moment where selling a market that is going up might be interesting is if we have a very, very, very clear scenario. So the strategy that I'm showing with you here right now is actually pretty simple, right? Use whatever way of trading that you are using. I don't care what's your trading system. I don't care what's your strategy. Use it to trade that. But understand how to trade it, right? Understand kind of the ideas that I'm sharing with you guys right now. So to me, this is going up. And the only moment where we might see this come back down is if we start to break down under this level. And if we get any correction around here, then if we see this, then we might start to see more downside. But unless this happens, there is no reason to sell this market, right? So I think that the best thing that you want to do is not fight the Fed, right? You cannot fight something where they can just print unlimited amount of money, right? Like you're fighting something that doesn't even have a limit to what amount of money they can put in the market. That doesn't make any sense, right? Don't fight this, right? You cannot fight this. It's that simple, If you try to be smarter than anybody and just sell this because you think that it's going down, well, you will get crushed, right? Just like I showed you guys, I've seen a lot of people do this. It's not working. Don't fight the Fed. The only moment where the short is valid is if you get the confirmation. Now, all of this that I'm saying is just my opinion, so take it for whatever you want, right? Listen to me, don't listen to me, it's up to you guys. I don't really care. I'm just sharing with you what I think is good, right? It's up to you to decide what you want to do with this, but I don't think that shorting this market right now makes any sense unless we get the confirmation. The best thing to do is just to ride the trend. It's always the same thing. You identify the long-term trend and you trade in this direction. It's that simple, And right now, if you decide to trade in the direction of the trend, you have a pretty nice ally, which is the Fed that wants to push this market higher with you. So, it's not bad. I'm personally not trading this market because just like I explained, I'm not, super keen right now in buying the stock market considering the economy. But once again, that's just me, right? So I'd rather be out of the market. Even if it goes up, I don't think I'm missing an opportunity. I think that there are better opportunities on other markets, which I've already made videos about that if you guys watch closely my content. But I don't think that this is the most interesting market. So I'm not personally going to buy this right now. I'm going to wait and see how the situation evolves, if we get a second wave, how the economy comes back after the lockdown and things like that. So I prefer to just, stay on the sideline right now and watch what happens. And that's another thing that you can do with these markets. If you're not too sure of how to trade it, just don't trade it, very simple, right? Just stay on the sideline, watch what happens, try to learn from it. And if eventually something clear comes up, you can trade it, right? And so just like I said, in the middle of the video, the strategy that you use or your approach or how you take the trade, it's not the most important thing, guys. What's more important is to understand what's actually going on in this market, right? So the downside view, the upside view, who has control, what's the trend, and there you go, right? So if we start to break down, maybe that the sellers will start to get more control. Maybe that the Fed will lose this kind of buying power that they have right now. Or if it just keeps going up, maybe that it will stay the same. So understand the bigger picture, understand what's actually going on in this market, understand that the markets don't have to make sense, okay? Right? It's not a necessity. Right now, this kind of price movement, Nasdaq almost all-time high, it doesn't make a lot of sense with looking at how the economy is doing, but that's okay. The markets are not always making sense. So keep this in mind, guys. Don't be entitled to your own opinion. Your opinion doesn't mean anything. The only kind of thing that matters is the price movement, right? So as long as it's showing strength, well, you know what to do, right? So I hope you guys enjoyed this video. I hope I made it clear as well. The goal is really, you know, with this video was maybe just to kind of open your eyes to the reality of the markets and how to understand these movements, right? And so I think it's really important to just, you know, keep in mind these main points that I explained and run with this, and hopefully that it helps you in your trading. So if you guys enjoyed this video, you can leave a like under it. I would really appreciate it. And also, well, as I said, don't forget to subscribe to the YouTube channel, share the video around as well. And yeah, some of that. Take care, trade with care, manage money well, and I will see you in my next video. Bye bye.